Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top performing stocks from Friday. So these are the top percentage gainers. And first up we have ticker symbol ENVA. It closed up 27%. As you can see here, it's breaking out. It was trading in this tight channel, and so it had a nice breakout above the top of the channel on Friday. You can see it was a multi-month sideways channel here, and then that breakout above does signal more upside potential. You can see the big giant volume spike. So this is a breakout on huge volume. It does have RSI up there at 79, Fasto at 80. So now it just has to cruise higher in this overbought power zone. It's currently trading above all the moving averages. If you look here at the weekly chart for ENVA, you can see here it's worked its way back up to the levels over here from 2014, and so you have the what is this, the November 2014 high close here is the key level to break. It's just above $30, and so a close above $30 for the week would be an all-time high close for the stock. This is the complete history of the trading of the stock, and so up here at 32 is the all-time high. So if it closes above 30 and then it breaks above 32, it'll be on what we call a blue sky breakout, where there's no overhead resistance. It'll be uncharted water. It'll be it'll show that it wants to continue heading higher. Now if it comes up here and it stalls out between 30 and 32, it could be a temporary top, since it has retraced back to this all-time high level. So keep an eye on that. This week's candle did close above the upper Bollinger Band. If the candles work back in the bands, you just want to see EMA 4 here, down here at this 25 level hold. As long as it keeps riding EMA 4 support, the longer term signal is to keep riding. Okay, let's look at BOOM. Okay, so yeah, this stock closed up 24%. It's been on a multi-day run. It's on a 4-day run, and then it had this big gap up open on Friday. There's a gap between high of day on Thursday and low of day on Friday. And Friday's candle here is pushing well above the upper Bollinger Band. You have the upper Bollinger Band down here at 34. And so if the candles did work their way back into the bands, you'd want to see that EMA 4 at 34.18 hold. If that broke, it could drop down there to fill the gap down here at 33. If you look here at the monthly chart, I had to use a monthly chart to find resistance, because this is really breaking out hard. It broke out hard on the weekly chart. It is pushing well above the upper Bollinger Band here, so this is a very strong move this month. So keep in mind, this is getting into the end of the month here, and so a monthly close well above the upper Bollinger Band could get the candles working their way back into the bands. And notice how if you go back here in 2016, a monthly close above the dot, this solid purple line is the upper Bollinger Band. So this white candle formed above, and then you had the red candle followed. Okay, white candle formed above the purple line, red candle followed. Same thing right here. White candle formed above, red candle followed. A white candle formed just above last month, and it did push higher this month. It's just, we'll just have to see what happens. You have to be on the lookout for it, working back into the bands when you get a push this big above the upper Bollinger Band. That EMA 4 down here around $30 is the big level to hold. To the upside, this 42.50 level is a big level. If it can get above that, I mean, there's definitely resistance here on the way up, but you'd be looking for a retrace back up to the 60 resistance zone. A move back up to 60 would be a retrace back up to the 2007 high close, which is around $58, $59. And so yeah, it looks like it's headed back up to that direction. I'm not sure if it's going to do that in a straight line. After this big push, it might take a little pause, but as long as that EMAs 4 and 8 keep holding, the long-term signal is to keep riding. The one thing that I did notice is check out the volume. Look at the volume. This is moving higher on super light volume. This last couple of years, it's been walking up on light volume. Look at the volume back here in 2005, way over here on the left of the chart. Huge volume for this thing. I mean, it traded in the day over 200 million shares one month, and you can see even when it was at these high levels, it was trading, huge volume. And so it is interesting to see that this has been able to work its way higher on super light volume. This this is an industrial machinery. So yeah, it's just a yeah, interesting chart. There's a lot of random stocks that are moving right now, and so yeah, you know, if you get away from the tech stocks and the FANG stocks and all that and start looking around, you'll see that there's quite a few interesting plays out there. Another one to look at is this BJ's Restaurants. I don't know what's going on here, but it's really making a strong move. Ticker symbol BJRI. Okay, it closed up 13% on Friday. You could see here there was a big gap up open. I don't know if they announced earnings or what, but you know, it had the gap up open and it's breaking out higher. It's pushing it well above that upper Bollinger Band. Notice the huge volume on the move on Friday. It's trading above all the moving averages. You know, there is a gap now between high of day on Thursday and low of day on Friday. As you can see back here, there was a gap in February and it never pulled back to fill that gap. You know, this could just be pushing higher. If you look here at the weekly chart for BJRI, you could see last week was a huge move. Back here in 2015 was the recent high close, right here around $53, and that close above does signal more upside potential. Notice how it also closed above the high from 2015. So this was a major breakout. You want to see it stay above 55. If it drops below 55, that's where this red line is. You know, that would be a signal that it could possibly consolidate. If the candles did work into the bands, you want to see EMA4 at down here around 51 hold, that pink line. This EMA4 has been holding since all the way back here in January, okay, before this big push started. So as long as it's holding, the signals to keep riding. If there's a close below EMA4, that would be a bearish change in trend, and then you could see it consolidate, similar to over here. Notice how it pushed real hard above EMA4, and then once it broke below right here, the downtrend really started going, and then notice how all these candles are riding it lower. So as long as the bull train is pushing higher, you keep riding. Once the you know, it hits some resistance, which this could be the level, but if it busts above and this 53 to 55 level turns into support, it could keep pushing higher. You know, when you see it close below that EMA4, that would be your clue that it's finally cooling down. Now check out this BJRI 20-year chart. I had to go all the way back. Stockcharts.com doesn't go further than 20 years. I wasn't able to find any historical data before that time, so this could be possibly making all-time highs here. It looks like. You know, don't get upset at me if I'm wrong. I know I've said that in the past and people corrected me, but from my data that I looked up just for this stock, that you know, it looks to me like it's possibly going to break out to all-time new highs here. This 2011 high, it looks like it's right around, you know, this 56 level, and so it closed right at that level. Okay, so if it busts above this 56 level, 56 turns into support, and you see it trading above that would be what we call a blue sky breakout, where there's no overhead resistance. It would be in uncharted water. Okay, this has been the historical top level. You know, notice how it topped out at this level in 2015. So it could make a top right here. You know, it could fail to break this 56 zone this week, and then it could pull back after this multi-month run. I mean, if you look back here, it's on a 8-month run over here. So for 8 months in a row, this has been running. Is it going to run for 9? You know, we'll know by whether or not 56 turns into support. Above 56 signals upside potential. If 56 turns into resistance, that where you could see some consolidation. Okay, so let's look at LABU. Okay, this is the S&P Biotech Bull 3 times ETF. You know, this keep an eye on it. It's up 2.5%. You know, it looks like it's heating up to me. You know, it had that nice bounce on Wednesday of last week off the 300-day simple moving average. That's the blue line here at 70. Okay, that's the same level that held in this April drop at the beginning of the month, and then it came back up. It bounced off of it again. So this is like that double bottom look to it, but it has to hold that level. It has to stay above. And then right now it's hitting the key level to break, which is the 200-day simple moving average at 79.74. If you see it trading above that level next week, that would be really bullish, and it could run back up here to the 50 and 100-day simple moving averages between 86 and 87. As you can see, this is below previous. So basically, if it gets above that 200-day simple moving average, it could run up to the 50 and 100-day simple moving averages. So keep an eye on it. It's trying to turn that middle Bollinger Band into support. That's the 20-day simple moving average, currently at 77.49. You know, if it can stay above 77.49, that signals upside potential, but it has to get above that 200-day simple moving average. Right now, it's at what we call a flex point. It's the Friday's candle fit exactly between the 200-day simple moving average and the 20-day simple moving average. And so one of those levels is going to break on Monday. I mean, it could form another candle right in between, but that would wind the chart even tighter. So going forward, a break above 200-day simple moving average signals upside potential, and a break below that 20-day simple moving average signals downside risk. It's only a good play now if it can get above that 200-day simple moving average. And so I'm showing you this chart because there's been quite a few healthcare biotech stocks that have been heating up, and so I'll show them to you later in the video. If you look here at AQMS, okay, so this is another industrial that has a good run and going. It's up 19% on Friday. Notice that it did close above key resistance. So there was this big resistance zone at $3. Okay, so this was a prior peak in February and in March, and so that close above on Friday, that's signaling more upside potential. Now it has to get through this zone over here between October and December, this October and November level, and so if it can get above this, you know, this 360 level, you know, so basically, you know, it's got to get above these three red lines. You know, that $4 level is going to be huge. That was a big resistance level. If you get above 4, then you have the 200-day simple moving average at 455 is the next target. Okay, so but it's going to have to get through this 350 to 375 zone to test 4 and then 450. Keep an eye on it. It broke out. It is on a 4-day run, and it had a volume spike on Friday with the close well above the upper Bollinger Band. So you don't want to chase here if you miss this play. You'd want to wait for a pullback as long as EMA4 at 294 holds. That uptrend should continue. You know, you want to see it stay above $3 now. If it pulled back and test $3 and that held, that might be a good entry point for those that missed the run. You know, if it keeps pushing higher, you know, it has to get above that 375 level. If it were to drop below $3, that would be a red flag signaling more consolidation. It would get stuck back in this previous channel. It has to stay above that level to keep pushing higher. Okay, let's look at BCOV. Okay, this is a technology stock, closed up 15%. You know, it has a multi-day run going, as you can see here. It's another one of those ones that's been pushing, and then it had the gap up open on Friday. There's a gap between high of day on Thursday and low of day on Friday. If the candles did work back into the bands, you'd look for that gap to fill, possible drop down to EMA 8. You know, if it dropped to 810, that gap would fill. You know, there was a giant volume spike on Friday. You know, notice last time it had the big volume spike, a red candle followed. This candle was pushing well above the upper Bollinger Band, so you just have to be on the lookout for it, you know, taking a breather. As long as EMA4 839 holds, you know, this uptrend should continue. If it were to drop below, I'd be looking for that gap to fill. If you look at the weekly chart here for BCOV, you can see it's broke out of this sideways channel. So it had this channel here basically, and then this week it broke out above high close horizontal resistance, which was the closing price here in October. It also broke above the 100 and 300-day simple moving or 300-week moving averages after closing above the 200-week moving average down here last week, and so that was your clue. It was heating up, and then it was able to push above those key levels. It also closed above 2017 high close resistance, which was right here at around $9, and so you want to see it stay above 9. If it could stay above 9, then it could keep pushing higher. Now if you see it drop below 9, that's where it could come down here and test the 300 and 100 week moving averages. That $8 support zone could get tested. It needs to stay above 9 and then break 975 to head higher. If that happens, it might run back up to that 1125 level. That was right before that big drop. Notice this big red candle here. You know, there's going to be a little resistance in here, but you know, break through 975 and it has a chance to run up to 11. Okay, let's look at OHGI. This is technology stock again. Keep an eye on this thing for a possible close above the middle Bollinger Band. That's the dotted purple line. It closed right at that level at 73. So going forward next week, if it's trading above 73, that's going to signal upside potential. It has to turn that level into support. You can see this candle here. It broke the dotted purple line, which is the middle Bollinger Band 20-day simple moving average intraday here, but it failed to close above, and the downtrend continued. You know, it closed above here, failed to hold, and the downtrend continued. It got above on this white candle and ran up to the 300 day simple moving average and pulled back. And so it's been having a hard time turning this dotted purple line into support. If it does close above that level next week and it holds, look for a possible run up to that 50-day simple moving average at 97. Okay, let's look at CYTK, closed up 12%. Keep an eye on this stock. It looks like it's heating up. You know, this is one of the healthcare stocks, and yeah, it closed above the 50 and 100 day simple moving averages on Friday, so that was a nice close above this green and gold line, and so it needs to stay above 827. That's the gold line, and then it needs to break this high close resistance here from March, and then high close from February. If you see it trading above $9 next week, that would be really bullish, and it could head back up to 10, which was the high close from January. Okay, so it has to get through this $9 resistance zone, and then 10 would be on deck. If you look over here in November, there's a gap between low of day on this candle and high of day on this candle, and so these candles right here in January, you know, it started filling the gap, but the gap's still unfilled. You know, the share price would have to get up to this red line here to fill the gap. You know, up above $11 would fill the gap. So you know, look for a potential run up to that 200-day simple moving average and gap fill level if it were to break above $10. Okay, let's look at ALT. This is another healthcare stock, closed up 13%. So yeah, so keep an eye on this one. You know, it closed above EMAs 4, 8, and 13 on Friday, so that was a good close. Notice that all these candles were below the pink line. Okay, so the last close above that pink line was wow, it was way back here in March on this black candle on the 13th. And then every single one of these candles here is below the pink line until you get to Friday. And so that was a bullish change in trend. You know, this signaled the start of a downtrend, and this could possibly signal the start of an uptrend. If these levels turn into support, it has to stay above 75. If we were to drop below 75, that would be a red flag. It also needs to stay above EMA 13 at 81. That's the orange line. And then the next key level to break is the middle Bollinger Band. If you see it trading above 85 and closes above that level, a new uptrend could possibly begin. It could possibly work its way back up to that upper Bollinger Band at 112, maybe up to that 50-day simple moving average. If it drops below, you know, EMA 13, that would be a red flag. Definitely not in play if it drops below EMAs 4 and 8. If you get a close above the middle Bollinger Band, that would be the signal that a possible new uptrend is beginning. Keep an eye on the dotted purple or the dotted green dots. That's Parabolic Sar. Sar stands for stop and reverse. You can see during the downtrend the green dots were above the candles, and then finally on Friday they flip below. That's a signal that a possible new uptrend is starting. If you look down here on MACD, the 12, 26, and 9 did cross over. The black line is the MACD line. The purple line is the signal line. When the MACD line crosses over the signal line, it's another signal of a possible new uptrend. You could see the 8, 13, and 5 had already crossed over. Also, there was good volume on Friday as well. That's what you want to see when a stock is breaking resistance. Okay, let's look at BKD, another healthcare stock. So you can see here it closed up 13%. You know, this is like some senior living thing, but it had a really bullish close above the 50-day simple moving average. So that was a good close. And so when that happens, we take note because it signals you know, a possible new bullish move higher. And so it needs to stay above that level. If it stays above 705, that would keep it in play. It needs to break this high close resistance, okay, from the 7th of March. If it can get above this 750 resistance zone, then what you're looking for is a run up to the bottom of the gap. There's a gap between high of day on this candle and low of day on this black candle here. And so a run up to 820 would hit the bottom of the gap. And then just above you have the 100-day simple moving average at 38. And then a run up to 880 would fill the gap. So this is the big resistance zone above. So basically if you see it trading above 750, there's a good chance it could run to this 820 to 880 level. The bottom of the gap is always a tough level to break, so keep that in mind. Okay, let's look at INPX. Now this is a crypto stock, one of the blockchain related stocks. You know, it's trying to heat up, so keep an eye on it. It has an ugly chart. It was trying to bounce. It got above the EMA 4 intraday on Friday. That's the pink line. It needs to close above that level to heat up. There's a gap between low of day on this candle and high of day on this candle. And so what you're looking for is if you're a bull, a close above EMA 4, and then you want to see a run up to this gap level, possibly fill the gap and run up to EMA 8 at 48. It will be a risk to hold as long as it's closing below EMA 4. You know, you don't want to try to catch the falling knife until it closes above. This is a really risky trade. Anytime you have a stock with this kind of ugly chart that's been in this very strong downtrend, it's really hard to time the bounce. You know, we have the clue here with this big volume at the bottom, but you know, if it closes above EMA 4 and you jump in and then it drops back below, you have to exit because it will be a risk to hold if it closes below that level. Okay, so keep an eye on that one. And then finally, let's check out CHEK. Yeah, so the warnings were put out on Wednesday of last week when it was forming this red candle that it was hitting key resistance. The blue line is the 300-day simple moving average at 1775. That's the big level to break. It did drop back below that 200-day simple moving average as well at 1427. You know, that was a big red flag. And then yeah, and then you had the big gap down open. And so everybody that held on this red candle got brutalized on that gap down. I mean, you know, we were putting out alerts when it was between, you know, 17 and 20 bucks. You know, we were putting out alerts up here to lock in gains in our chat. So I recommend coming and checking that out. Yeah, so anyways, the gap down, everybody got brutalized. And then on Friday, they tried to suck in some more people with this candle. This is a spinning top. You know, you have the long upper wick and long lower wick, but a small real candle body. Even though it traded way down here and way up here, it closed the day close to where it started. It's still below EMA 4. It did close back above the 100-day simple moving average, and so that's good. It needs to stay above that level. So if it can stay above 877, what you're looking for is a break above the bottom. See how this upper wick here didn't quite fill the gap? It needs to come up to this red line right here to fill the gap. Once it hits that level, that will be a gap fill. Didn't quite fill the gap on Friday. You know, that's also lined up with that upper Bollinger Band. If EMA 4 at 936 remains resistance, that's going to signal downside risk. You're going to know that it's going to try to follow through and head higher if it breaks above EMA 4 and stays above that 100-day simple moving average. You know, if this 10 level remains resistance, that'll be a red flag. This $9 to $10 zone, it has to hold down here the 50-day simple moving average in EMA 13. If you see it drop below that 50-day simple moving average at 711, that would be a major red flag, and then you'd have the middle Bollinger Band at 588 on deck. So yeah, yeah, wild day for CHEK. You can see here the big push, the big run up. You notice that before over here on the 20th, there's no volume, and then all of a sudden the volume poured in, and then they pushed it up to the top up here, and then you have the gap between low of day on the 25th and high of day on the 26th. You can see the upper wick here on Friday, you know, started filling the gap, but it has to come up here to this you know, 1225 zone to fill the gap. And then the big level to break is it ran up to, you know, it had a bullish move into the close. Notice how volume came pouring in, but then once again they dumped, you know, they dumped some more shares right at the close there. It has to get above the 100 simple moving average at 1068. So going forward on Monday, if you see it trading above 1068, that could signal more upside, and you could get a run up here to 1225 and fill the gap. If that 100 simple moving average on the 15-minute chart turns into resistance, you're going to see the moving averages down here tested. That's the 50, 200, and 20-day simple moving averages. If it dropped below that middle Bollinger Band and 200 simple moving average at 780, that would be a big red flag. It needs to stay above those levels. You know, you can see how it bounced off of this blue line on Friday. That's the huge level to hold. That's where we get the technical bounce off, and that's what happened here. So you always look to load off of that support zone when tested, if it holds, you know, because after you get a big pullback, many times that's where it bounces off of. Now, if it dropped back below that 300-week moving average or 300 simple moving average on the 15-minute chart, it would signal that the chart's totally broken. So it has to hold that level. If it dropped below, that would signal major downside risk. So yeah, going forward above $11 is going to signal that it wants to head higher. If you see it drop below 780, that's going to signal downside risk. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out our chat. Thank you.